Hey there, fellas. In this video, I'm going to be talking about one-to-one risk reward and how I personally use it in my trading. A lot of folks think I'm crazy for using a one-to-one risk reward, and a lot of folks still believe, even at this moment, that they cannot make money with one-to-one, that they need bigger winners, because that's what's been preached throughout the industry for so long, that you got to have a bigger winner than a loss to be successful as a trader. But that is 100% false, and I'm going to show you why, and I'm going to tell you why in this video. Okay, I've been trading a long time. I've been teaching a long time, trading since 2014, and I have always traded with a one-to-one risk reward. That is what my career has been built on those base hits, those singles, those low-hanging objective targets taken consistently, and then just compounding over and over and over again. That is what's built my career, not home runs, not 2-to-1, not 3-to-1, not 4-to-1, but 1-to-1, okay? And with most individuals that I've taught over the years, not every single one, because some folks actually do gravitate to a little bit bigger risk reward, but it's not the majority. Most of the individuals that I've taught, once they have switched to 1-to-1, they have found more success. And there's a reason for that, which I'm going to tell you. There's a big reason for that. It's not just magically, oh, you switch to 1-to-1 and now you're profitable. There's a very big reason why that's the case, why most traders, once they actually give it a shot, that they start to move in the right direction. The problem with big risk reward, even though you can be profitable with it, is the trade-off is you're going to have more losses. And I think just about everybody understands like the point of big risk reward is it allows for you to have more losses and you could still be profitable. But here's the thing that a lot of folks don't realize. When with big risk reward, you're going to have more losses. That's part of it. But what comes with that is your psychology getting beaten down. And you might say in the back of your head, oh, I understand that, but if I just keep executing, I'm going to come out on top. And that sounds all fine and dandy. But the truth is, it's harder on you psychologically when you're taking loss after loss after loss after loss with big risk reward. Sure, that one win makes up for it, but what happens is it makes it much more difficult for you to continue to execute when you are executing with big risk reward, folks. It makes it more difficult to stay with your system, to not go on tilt. But if you were to simply take low-hanging objectives, stack base hits, what comes with 1-to-1 is a higher win rate, because everybody always says, oh, but you got to be right more times than not. That's no issue. And here's why it's no issue. What you're going to find is if you have an edge and you stick with low-hanging objective targets with base hits, that win rate, it's going to go up. I'm telling you, it just magically, right? Just magically finds a way to go up because you're not swinging for the fences anymore. That's how it works when you go for low-hanging objectives. Your win rate goes up. But a lot of you don't realize that, are trading big risk reward right now. You don't realize that because you're used to taking so many losses because you're swinging for the fence and you have these ultra tight stops, trying to be perfect. And you're just taking so many losses that when you hear somebody like me say you can be right more times than not, you can have a 60% win rate, 70% win rate. You just cannot grasp it. But the truth is, 1-to-1 is better for your psychology. 1-to-1 for most traders is the way to go. And in this video, I'm going to show you how I personally do it. So for example, we're going to go over a couple different examples here, but I'm going to take this GU from Thursday. So I had like this bear CC deal on it, which is one of my strategies, one of my setups that I trade. And it was right there. So I had this strong close lower on GU beneath that low, and my target is right here. Okay, so I already know right away my targets could be where I had that strong close at. This forward candle opened up right here. Follow my cursor very closely. And it came up and it took out the high of that candle right there. It came up into an imbalance right there, all while leaving this intact where I had the strong close. That's my CC deal. Okay, so I see that happen. And you folks that are familiar with CC, you know what to look for here. I got my push up. That's what we consider like the fake push lower, or a fake push higher. And plus it's also happening very early in the forward candle, which is, with CC to get super high win rate, you want to see it, like time is very important. When it happens is important as well. So it's happening very early in the forward candle. So it's early on, takes out that buy side, comes into that. So I got that sweep in here. And here's the thing, I actually got my confirmation right there. So you see like right there, because my rules are my rules. I know it's not the biggest displacement, but I got this fair value gap. I got that strong close beneath this short-term low right there. That's where I got in. Now, if I was trading big risk reward and say I was like put my stop above that high, I would have got tagged out, but I didn't do that. I know somebody's looking at it, but if you got back in again, you would have wrote it down. Yeah, but it's not always that clean. That's the thing. It's not always that quick. It's what you'll see a lot of times. Here's what you'll see a lot of times. You big risk reward folks, it's what you're going to see a lot of times. Like you get tagged out, boom, on that push, you're tagged out. You hop right back into it when it's coming down right here. And then it'll come up again to tag you out. And then again, it'll tag you out. And again, it'll tag you out. And again. And then finally you might get it, right? Because you get stuck in this chop. That's the thing about it is sometimes you'll get stuck in these choppy environments where it's a little bit back and forth. And when you're just like strangling your stop out, right? When you're just trying to get these super tight stops. And I know a lot of you watching this have been there. I've been there when I was first starting off and I was losing money trying to do big risk reward. It can erode your confidence. But here's what I do. Folks. I'll hop in right there. And I know my target's going to be down here. So I already know where my target's going to be. That's very important to know where your target's going to be. And what I will do is I will just put a 1-to-1 on it. Now that just looks absolutely absurd to some people. It's unconventional. But here's the thing, folks. If you want to make unconventional money, you do unconventional things. I don't know many people that trade like I do. And I also don't know many people that have results like I do. So just to the individual that has been brainwashed by conventional education from these gurus, that just looks insane. Here's what I do. Here's what this does for me. It allows me to not be perfect. It allows me to, you need to understand where price is going. And then your objective is to get on there for the ride. Stop worrying about the perfect entry. Stop worrying about the perfect entry so you can flaunt on social media, so you can satisfy your ego. Just get in, focus on where it's going, and get on for the ride. And then what you do is, you allow for enough, you get the 1-to-1, because what that does is it allows for wiggle room. It allows for, because you're going to have these cases where it'll chop a bit. And that was still a pretty quick move. It didn't take very long, but there are times where it'll chop a little bit more for me. And because I have this, because I do it like this, I'll allow for price to work. I allow for price to do its thing. This puts me outside of the range. Pay very close attention. Pay very close attention. This is very important. Very important. This puts me outside of the range where everybody's stops are. Think about it, folks. Everybody keeps their stops at the same exact fucking place, right? Above highs, below lows. It's the same place. Every single time, it's the same place. Everybody keeps their stops. I'm outside of that range. Where that liquidity is, I'm outside of that range. They're outside of the range. Everybody's in the same place getting taken over and over and over again. These big risk reward traders. And I'm just relaxing. I'm sitting there, let it do its thing. See what I mean? It's a low hanging objective target, but also at the same time, it gives it wiggle room. And that is how you stay alive in a lot of these fake outs, and these little fake outs that traders get caught in repeatedly is what erodes their confidence. It starts to demolish their psychology. But when you have 1-to-1, you give it room to work, you have a high win rate, it is much better for your psychology. You're still going to have losing streaks. You're still going to have a drawdown. That is a reality of trading that you're never going to avoid. And I'm not going to be one of these gurus that is going to sell you that you can avoid that, because you can't. But it's more short-lived. You can build out of it more easily. And when you do it like this, it allows you to get outside of the range where everybody's stops are residing. And that is the big thing here. So it's a couple things. It's psychology, but also you're taking an unconventional approach and you're putting your stop outside of the range where everybody else's is. Sounds crazy for the beginner that is, first looking at it, because it's like literally the exact opposite of how everybody else does it, right? Everybody else, you see it because it sells good on social media, like, right? They'll show something like this. It's just not ginormous risk reward, right? But we banked, but then they don't show about the 20 or 30 so that failed before that, but they'll go and plug the one on social media that actually succeeded. They don't show you that, right? They just want to get you into their course, to buy their course, hook, line, and sinker, because that does sell. It does look better. But what actually works is it's much different. What actually works in the real markets is a lot more different. The best traders don't do that, folks. The best traders do not shoot for ginormous winners like that. Only the marketers, or sometimes I'll see it with like prop firm traders too, that want to get people into their firms to trade with their firms that they're promoting, of course, as well. I see it a lot with them. But actually real traders that are actually making money in the markets consistently, this is how they operate. I'm not saying everybody does 1-to-1. I mean, I've seen people do 2-to-1 as well. And I'm not saying you can't be bigger winners. Again, I'm not saying that's the case. But it's easier on you. It's easier for most people to do trade at 1-to-1 successfully. Also, I forgot to mention, folks, just so I got to come receipts real quickly. So don't look like I'm coming in here in hindsight and just plugging random stuff. Everything is plugged in my chat beforehand. And if you want to be a part of my free Discord, which is over here, I plug these charts in there as well. The analysis charts. If you want to be a part of my free Discord and get access to my plays real time, so you can learn real time where all this stuff plays out, there will be a link to that in the video description. All right, it doesn't cost you anything to join, 100% free, just like this one as well. So we had that CC right there. See right there, came up, it tested our pivot, and I got my confirmation. Now this one did get really, really close to taking me out, extremely close. But because I use that 1-to-1, I was able to stay in it. So I'm looking to target this low down here that I just marked on there. That was the low of that forward candle. I'm just on a lower time frame chart now. I get confirmation. Plus also you got to consider 10 pip rules. I don't do anything less than anything. I don't do anything less than 10 pips first stop. And then that translates over to my PT. So I got this on this pullback in here, targeting this low down here with a 1-to-1 stop on it. So I got a 1-to-1 on it, and you can see it got extremely close. Just got a few pips away. This is what I mean though when I say it allows for imperfection. Because here's the thing. I was 100% correct on that. 100% correct on where it wanted to go. It just needed a little bit more liquidity first. It needed a little bit more fuel. And it wanted to reach for that 80 institutional price level up there is what it was, really. You see that 80 up there? So, you know, if you're trying to catch the exact top, you can get tagged out a lot on this thing. But what this allows for is it puts me outside of the range where everybody's stops are going to be. So what it does is it comes down. It looks like it's about to take it. It's about to do it. Nope. Sight. Boom. Comes up. Takes out liquidity. But I'm not taking where everybody else is with those stops up there. I'm outside of the range where those stops are. And I give price a lot of room to work with the 1-to-1. So it allows it to come up, gyrate, to do its thing. And I'm able to survive because I'm not trying to be perfect. I know likely where price is going to, and it's down there. And I'm just allowing for price to work, to do its thing. And I'm just sitting there, I'm relaxed and letting it do its thing. Handles it. So you don't realize how much this does for your psychology. How much that does. It's if a lot of folks think like 1-to-1 would be more stressful, right? Because you gotta be right more times. I'm telling you, it's not. It's not more stressful. I played around with big risk reward just like everybody does when I was a beginner trader, and I found it more stressful. I bought into it. All the gurus told me, all the videos said I got to do it like this. You got to have bigger winners and losses. But I found that it brought on more stress for the reasons that I've already talked about, because taking so many losses just took a hit to my psychology. You still got to be able to embrace losses. You got to be okay with losses, but 1-to-1 allows for less. It allows for less and less drawn out, like not as big drawdowns, losing streaks. And when I made that switch, it did a lot for me. 1-to-1 is not the answer to everything. I'm not selling you that in this video, that it's 1-to-1 is the answer to all your problems, right? But it's another piece of the puzzle. For a lot of people, it's another piece, and you put piece by piece by piece by piece by piece. That's how you make progress. Don't knock it until you try it, folks. Not every single play is the same, but my point is, allow for that imperfection. Allow for price to work and to do its thing, and it's going to do wonders for your psychology. I'm telling you, it ain't right for every single person, but for the majority, they would do better if they did go to it. Not everyone, because there's somebody watching this right now that does not fall into that bucket. And you got to experiment to see if you're that person or not. But a lot of you are going to do really, really good if you made that switch. And once more, if you do want to learn a little bit more about 1-to-1, you want to see these plays play out real time, then there's a link to my free Discord in the video description. I'll also link my other videos, by the way. My other videos on 1-to-1 risk reward, they're going to be in the video description as well. You can watch those too. Hope you enjoy. Going to miss value. See you later.